Today is a nuanced session, strong in some areas, weak in others. Here is the full picture. Welcome to MTRS_Market Pulse. Here is your complete Forex market briefing for June 5th. Currency markets are being driven by a complex mix of central bank policy, geopolitical risk, and shifting growth expectations. Let us break it all down. Here is a snapshot of how the major currency pairs are trading today. Euro to US dollar is trading at 1.16, losing 0.05% on the session. The world's most traded pair is driven by ECB versus Fed rate differentials. Currency markets are reacting to what would a US-Iran deal mean for European stocks. Pound sterling to US dollar is trading at 1.34, losing 0.21% on the session. Sterling is highly sensitive to UK inflation data and Bank of England rate guidance. Currency markets are reacting to Iran shock jolts Asia and Europe to speed up energy transition. US dollar to Japanese yen is trading at 159.94, gaining 0% on the session. Dollar yen tracks the US-Japan rate differential and Bank of Japan intervention risk. Currency markets are reacting to Crypto Clarity Act in spotlight for bad actor provisions as Senate process grinds forward. USD SGD is trading at 0.7794, gaining 0% on the session. The Singapore dollar reflects Asian FX sentiment, trade flows, and MAS monetary policy. Equity markets are responding to reports that gold prices tick up as traders weigh Iran truce prospects, hot us inflation. Australian dollar to US dollar is trading at 0.7136, losing 0.53% on the session. The Aussie dollar closely tracks commodity prices, especially iron ore, and Chinese growth signals. Investor sentiment is being shaped by gold slips as rising oil prices and inflation concerns temper safe haven demand. Yahoo Finance. US dollar to Chinese yuan is trading at 0.1476, losing 0.16% on the session. The onshore yuan reflects PBOC daily fixings, US-China trade dynamics, and capital flow controls. Currency markets are reacting to what would a US-Iran deal mean for European stocks. Now let us look at the macro forces behind today's currency moves. On the geopolitical front, this comes as Tech Weekly, software earnings help S&P 500 hit 8th week of gains, Investing News Network, adding pressure to energy markets. This is adding a risk premium across energy markets and supporting safe haven demand. The key macro overlay remains monetary policy. Equity markets are responding to reports that gold prices tick up as traders weigh Iran truce prospects, hot us inflation. Any surprise in the rate path could trigger outsized moves. On the data front, equity markets are responding to reports that Tech Weekly, software earnings help S&P 500 hit 8th week of gains, Investing News Network. Currency markets are reacting to what would a US-Iran deal mean for European stocks. Currency markets are reacting to Iran shock jolts Asia and Europe to speed up energy transition. Our near-term view on Australian dollar to US dollar. Australian dollar to US dollar is in a consolidation phase, a pattern that can precede a significant directional break. Watch the $0.7279 resistance and $0.6993 support as the boundaries of the current range. Currency markets can move fast and unexpectedly. Central bank surprises, geopolitical shocks, and data prints are the key risks to monitor. Before we wrap up, here is your watch list for the sessions ahead. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. A quick like takes 1 second and helps this channel grow. We genuinely appreciate it. Subscribe for daily coverage across every major market. Tell us in the comments what you are watching most closely right now. That is all from MTRS_Market Pulse for today. All analysis is for informational and educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor. Trade safe, and we will see you in the next one. That is your Forex briefing from MTRS_Market Pulse. Subscribe for daily currency coverage.